Welcome back to Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy, and this is the last time we're going to get together today. So we kind of have to pin down where everything's going, or where it's been at least, so we have an idea about how we might open up tonight and how we trade into tomorrow morning. So that's kind of important. The technicians will definitely be looking, that's for sure. So why don't we take a look at these corn boards to make sure that we've got that all sorted. The March contract there in Chicago, corn is up 7 cents, 578.5 is last. We've backed off a little bit here, so we've got about 3 cents off the highs. May's up 7.5 cents at 580.5. So losing a little bit of ground going into the close, I would say. How about soybeans? Have we consolidated there as well? Yeah, just a tad. We've got Jan up 16.75 cents at 12.45. That's 4 cents off the highs. Again, March up 16.25 cents at 12.51.25. All right, let's see if wheat's doing the same. Call this a little bit of consolidation going into the close. March up 26.5 cents at 8.17. About 3.5 cents off the highs. Again, that's a lot of what we're seeing in the corn and the soybeans. May's up 25.5 cents at 8.21.75. All right, let's see if hard red wheat's consolidating itself as well. March is up 26.25. That's 8.45.5. Closer to the highs, about 3 cents off. May's up 25.25 cents at 8.44.75. But we're going to call all these boards pretty good, considering what we've been through the last few days. And let's take a look at spring wheat in Minneapolis. What's happening there? March is up 22.25 cents at 10.42 even, and that's 5.5 cents off the highs. May's up 16.5 cents behind it at 10.26. Again, about 5 and a bit cents off the highs. And then lastly, let's take a quick peek at cotton. It's been around the neighborhood of unchanged. It still kind of is, but just to the better side. March is up 21 points at 104.40. Let's bring in a good friend of mine, a good friend of the show, an old trading partner, Todd Bubba Horowitz from Bubba Trading. Todd's in Chicago. Todd, thanks for being on the show. I just rattled off a bunch of those grain prices. What are your thoughts there?
With you today, an extra time, but hey, listen, I assume you'd see, the corn and wheat have been very strong anyway, so I'm not surprised to see the rally there. And beans, look at it, it took a pretty big hit, on the way down, and you always expect a bounce. I think we think too much about that they're only going to go straight down when they go down or straight up when they go up, but there's always a pause. I mean, we ran up to close to $13 and pulled all the way back down to 12. You're going to get some kind of retracement. I would make a case that maybe today they closed right at resistance and are probably still headed lower. I still think they're in a little bit of a downtrend, and today's rally in beans is just a dead cat bounce.
Well, I mean, it feels as though, at least with the equities doing what they're doing, and then maybe even crude oil a little bit, we're more of a getting back to a little bit more of a normal, at least where we were. And that's why I think you've seen gold doing what it's doing, and I think that's why the dollar is doing what it's doing. So I think the market's just kind of taking a breather, don't you think, a little bit?
I agree with that. I mean, I think, look, you had a couple of big ugly days in the markets that turned around late and really got hammered. And you saw today, they tried again today, but of course, like everything else, there will be some retracement. There'll be some people that get cut short. You and I talked about it after the report. People are standing around that are short, and they're not going down anymore. They start chasing them up. And, I think there's a lot of problems. You and I talked about the economy looks really bad, and there's a lot of issues out there. But there is always some normalization, and you're seeing it with the dollar and the gold, as you mentioned. And I think, look, I think we've got some issues. I think the equity markets are in trouble, which actually is more of a benefit to the grains anyways at some point because, of course, money will go somewhere, and hopefully it'll go into the grain markets and the rest of the agricultural world. Right.
You know what? There's room for these agricultural markets to trade higher. Just on the back of the inflation, forget about weather or supply and demand. Inflation's still there, and it's not going to go away anytime soon. All right. We're going to go away, pay some bills. Stay right there, Todd. We're going to come back and talk livestock with Todd Horowitz from Bubba Trading. Welcome back to Market Day Report. I'm Scott Shelley. Thanks for joining us. Thanks for staying with us if you've been with us all day. But these markets, there's been tons to talk about, and today we did not disappoint. Let's jump into the livestock. That's what we came back for. Let's see what these live cattle are doing. The Cow Guy wants to look at live cattle. How about that Feb market is up $1.12, 139.72, up against the highs there a little bit. April's up $1.07 at 142.85. So live cattle performing okay today. What do we got happening in the feeders? The feeders are a little bit better here today, even in spite of a better corn board. How about that? Jan's up just 7 cents, though. 165.90 up against the highs. March up 35 cents at now 40 cents. 168.30 in that March contract. All right, let's take a look at that's a strong showing, by the way. Let's take a look at lean hogs real quick before we get back to our guest. Lean hogs, let's say Feb's up $2.05 at 82.17. That's pretty good. April's up $1.47 at 86.55. All right, good stuff. Let's bring back in Todd Horowitz, Bubba Trading. Todd's in Chicago. Todd's an old pit trader friend of mine. Todd, what do you think about the livestock? Any feelings there? Anything strong jump out at you?
Well, I think fat cattle's really pretty strong, and I think hogs have weakened a little bit, which is not a surprise. I mean, they were awfully high priced for December for quite a while, but I expect after the first year and going into the season, they'll pick up some price. I'm pretty impressed with the way feeders traded today. They were lower earlier when I looked, and suddenly they have at least flattened out and got to at least positive ground. And again, with higher corn prices, that's always interesting because they like to trade with corn. If corn goes up, they go down. But today they were able to fight it off, and I think they look okay. I think the agricultural space in general looks really solid and will be better. And of course, for many reasons you've mentioned with inflation and other things, but I do believe that is also a great spot where money likes to go when it comes out of equities. And it looks to me that money wants to start to come out of equities a little bit. So
yeah, and I think that. You have to remember it was 2008, 13 years ago when we started this, or when commodities kind of took the lead, and maybe that's going to be the case again this time. So 2008 commodities led us out of that one. Maybe it's going to lead us out of this one again. Thanks for being on the show. That's Todd Horowitz from Bubba Trading. He's coming to us from Chicago. I'm in Nashville, and I'm going to throw it back over to Tammy, who's in Nashville too.